Several major banks are seeing growth with the release of their first quarter earnings reports.
The positive news comes a month after the collapse of Silicon Valley Bank and Signature Bank. JP Morgan Chase, Wells Fargo, Citigroup, and PNC Financial all surpassed Wall Street's profit expectations for the quarter. That caused a jolt to their respective stock prices. But it wasn't just banks that saw gains. United Health Group also surpassed expectations as well.
And joining us now here on set is Jacob Sonenshine. He's a markets reporter at Barron's. First off, thanks so much for being with us. Now, I want to ask about JP Morgan Chase and Wells Fargo. Both saw strong earnings and revenue gains this morning, better than anticipated. What's behind that?
Yeah, even the JP Morgan CEO, Jamie Dimon, even said most of that was because of the increase in interest rates. Remember, rates are fluctuating month to month, day to day, all that stuff. Year over year, if you think about before the Fed increased rates in Q1 last year, now you have rates way up year over year. So that's been a big part of the revenue increase. Yes, so saw a big revenue increase at $38 billion this year. Loan volumes got hit a little bit. I don't know if they were down year over year. It's hard to see that in the income statement, but most of the revenue gain was rates up.
So what are today's releases showing us about the stability of big banks in the wake of last month's collapse of Silicon Valley Bank and Signature Bank?
That's the key for the broader market. So you can see in Dimon's comments a little bit of concern about the economy going forward. You can also see when you look at the revenue line for especially lending revenue for JPM, Citi, Wells Fargo, you can see that rates took revenue up a lot year over year. But you can also see that if that's the case, loan volumes got hit. That's what the Fed's trying to do. Higher rates, less demand for loans. And the bank CEOs don't want to talk too much about that. I always command F loan volumes on the earnings releases. You don't find it too much because they don't want to talk about it. But that's the concern going forward. And you're going to see a little bit more demand destruction throughout this year.
Let's pull out big picture here. What did today's earnings tell us about the state of the U.S. economy and the possibility of a recession?
So first of all, the volume issue, that's number one. The other thing is between Wells Fargo, Citi, and JP Morgan, you had several billions of dollars. I don't know if it was 5 or 6, but it was not quite 10 of loan loss reserves. So that is cash that the banks set aside for potentially bad credits. So there are some quarters where they have a negative number on that, which means that they were releasing some reserves to be invested, to be returned to shareholders, whatever it is. This quarter, you're seeing a few $1 billion from those 3 banks set aside. So rates have come up a little bit in the last year, but there's still more demand destruction on the way because policy operates on a lagged impact in the economy.
Right. It's an important point to keep in mind because people are looking for something, I think, a bit more instantaneous sometimes.
Right.
But you have to remember it's sort of a lagging kind of issue here. So, Jacob Sonenshine, thanks so much for breaking it all down for us. We appreciate it.
Thanks for having me.